What is a reverse mortgage? How do they work? What can you do with them as an investor? How do they help the seller or the homeowner when they got the loan from the bank? A reverse mortgage is kind of like what it sounds. It's the opposite of a traditional mortgage. A traditional mortgage is used to purchase the home and you make monthly payments until you pay off the debt. A reverse mortgage, your home is already paid off or has a very small amount of debt. You go and take out a big loan, you get the money up front, you get to use that personally, and then you pay it back over time. When you pass away, that property goes on back to the bank. They're typically used for senior citizens that don't have big retirement funds that can take the equity out of their home and then pay that back over time. Personally, from my experience, I've seen them be more detrimental or harmful to families than I have to be helpful. There's no reason they couldn't go get a HELOC or a traditional type mortgage and go about it that way, but it's become very popular and a lot of families are doing it. I'm not going to say that they're always bad. It's just the families that have come to me with that problem have been in a rough situation. Sometimes they're probably an okay option, but I've always seen them to be a problem. The reason that they're a problem is the debt and the interest on that property continue to grow, and they're really a loan to own type model where the lender did the initial loan because they want to own the property down the road. They're also restrictive because they limit the things that an investor can do if they were to get involved trying to help a homeowner that may be going to a foreclosure or dealing with an inherited home that's got a reverse mortgage on it. As an investor, you're very limited on what you can do. You can't do a subject to because that lender has made it their entire business structure and plan to know whenever that borrower has passed away. They have clauses inside of their loans that as soon as they die, they call the note due and they then take over the ownership of the property. So you can't do a subject to. Typically, there's not a lot of equity spread inside of a reverse mortgage. So the really only option is to hopefully sell it on the retail market and get a new homestead buyer to get a 30-year loan that they can use to try to pay off that debt. As an investor, you probably can't wholesale it. You might be able to fix and flip it. Again, if there was equity, I doubt there'll be enough equity to wholesale. There might be enough equity to go ahead and do a fix and flip. Now, if you're fixing and flipping, one of the cool tricks you could do is just keep that reverse mortgage in place. Don't go take out a hard money loan, limit your costs and pay off that loan at resale. You are running a bit of a gamble that they won't call the note due in the interim while you're repairing and fixing up the house and before you get it sold. You could go ahead and start off with that model, and if the worst happens and they start to call the note due, you still have a little bit of time. Nobody calls a note due in a month. It always takes them a couple of months, and that might be enough time for you to fix, list, resell the property. If it's not, you'll take a hard money loan out at the end or something in order to pay off that lender. Literally wait till the week before the auction to do it. Don't try to worry about it 3 months. They send a lot of nasty letters. Ignore the letters until you actually get a notice of sell letter in the mail. Another option you might have if you have a W-2 is go take out your own traditional mortgage for that property. Buy it from the seller, take out a new loan in your name and make it a rental or make it an owner finance if you can wrap the note if there's an equity spread in between them. You have a couple of options. The problem is that debt. You got to get rid of that debt. Take out a new mortgage in your name, flip the home to a new homestead buyer on the retail market, but you've got to get rid of the debt. That's the only choice that you have. Personally, we don't like reverse mortgages. When they show up, we tell them that we just can't be a buyer. I wish I could, but most likely, majority of the time, that property is going to end up back in the hands of the lender. Hope that helps. It's always good to learn more. Reverse mortgages are out there. They're coming and going in popularity up and down a little bit. Personally, not a big fan of them. I don't think they help the homeowner. I don't think they help investors. I'm not a big fan of what they're doing, but occasionally they might be a good option. Hope that's helpful. Let me know more questions and conversations you'd like to talk about. Thanks. I'm not gonna say they're always bad. I'm not gonna say that they're always bad. Lender, no. It's amazing how I forget everything I know right when I start recording. If you have questions about real estate investing, owner financing, or any other aspects, don't hesitate to shoot us a message or make a comment on a video. Don't forget to subscribe to our YouTube channel and follow us on the other social platforms to stay updated on the ever-changing real estate market. Happy real estate investing!